In the past, many investors have criticized Charlie Munger for taking a position in Alibaba stock.
I invested in China as I could get so much more, so much better companies at so much lower prices, and I was willing to take a little political risk to get into the better companies at the lower prices. Other people might reach the opposite conclusion.
No sane investor could possibly want to buy company shares from China, considering the authoritarian regime and their zero-COVID policy was stifling the economy and causing civil unrest, which is bad for business. Even Charlie Munger himself sold half of his Alibaba shares a couple months after buying them. The goal of this video is to find out what happened to Charlie Munger's Alibaba shares. For those of you who aren't aware, Alibaba is the largest e-commerce company in China. They have many business interests, including payment processing and other financial products through their subsidiary and financial. All of that came crumbling down one day, not because of poor business decisions or money-losing shenanigans, but because of a certain man called Jack Ma. He was the founder of Alibaba and a widely respected one at that. What happened was, Jack Ma insulted China's government indirectly in a public speech.
不能用管理火车站的方法去管理飞机场，不能用昨天的办法来管未来。
In a dramatic turnaround, Chinese regulators brought the IPO plans to a halt, casting doubt over the future of Ant.
China's government has a track record of being authoritarian and controlling, so free speeches are a big no-no here. Obviously, the CCP was angered and launched a massive crackdown on its tech companies. They shut down Ant Financial's IPO, which was supposed to make it the most valuable company in the world, and launched investigations into large companies like Didi. Many companies in China freaked out and began offering billions of dollars to charity at the expense of company profits, all to appease the CCP by showing they were doing something to support their common prosperity drive. Investors overseas were shocked by what China's government was doing, and they exited Alibaba stock, forcing the once proud company's stock price to dip to a third of its original value. Charlie Munger sold half of his Alibaba shares but kept the rest. He got a lot of flack for this. Some time has passed, and it turns out Charlie Munger's decision wasn't too horrible. Alibaba stock is rallying. It's risen by more than 34% in the past month. But why? There are many reasons. Jack Ma, the one who pissed off China's government, was already forced to step down from both Alibaba and Ant Financial, so he's out of the picture. China's government had stopped their crazy zero-COVID policy, so more people can move around in the open freely now. Once the lockdowns were over, the Chinese people continued doing what they did best, which was rebuilding the economy. China's economy is improving. Investors are optimistic about China's possible return to normalcy after years of absurdity. Perhaps the worst was over. This year, in January 2023, it was revealed the Chinese government has taken golden shares in Alibaba in an attempt to control their internet giants. A golden share is a type of share that gives its shareholder, in this case China's government, veto power over changes to the company's charter, along with voting rights and the ability to block takeovers or acquisitions by other companies. Brazil does this for its own state-owned companies, and so does the UK. Now you might think more Chinese governmental control over its companies might scare off investors, but when China bought shares in Alibaba, it was part of its attempt to retain control over the companies while loosening its control over the tech sector. Instead of using a heavy-handed crackdown, China is trying to take a more controlled approach by getting more influence over its tech companies. It's either this or surprise sanctions on companies and hefty fines that damage the business. So this softer approach is preferable, both to investors and company owners in China. The Cyberspace Administration of China, China's internet regulator basically, bought 1% of Alibaba so they can have special rights over business decisions. Alibaba has been struggling with government crackdown for years now, so this control by the government is a relief for them. Surely the government won't hurt something it already controls. China has done this to many companies. It's taken some shares in ByteDance, which owns TikTok, Tencent, which owns WeChat, the super app, and also Alibaba. China kinda needs Alibaba and Tencent to design semiconductor chips so they can weather US sanctions, so it's in their best interest to play nice with Alibaba, but with more control. Now, I'm not condoning this. I'm just saying the worst for China's tech companies may be over now. China's stocks are rallying right now. So what happened to Charlie Munger's Alibaba stock? Is the value of his portfolio rising since Alibaba stock has started rallying again? Well, yes and no. Charlie Munger obviously still has some 300,000 shares of Alibaba left in his portfolio after selling some last year. The value of his shares definitely rose since they reached the bottom of $63 a share last year in October. In fact, Alibaba stock has risen by an astonishing 34% in the past month alone, and it's continuing to rise each day. Right now, Alibaba shares are worth $117 roughly. While that's a far cry from what it used to be worth, which was over $300 a share in 2020, Alibaba's rise in stock price means Charlie Munger made money this year. The problem with that statement is what Charlie Munger paid to get ownership of those shares. We have to take into account how much Charlie Munger paid for those Alibaba shares to know if he made money. From Munger's SEC filings, we know how much he paid for Alibaba stock. Out of the 600,000 shares Charlie Munger bought, he bought 300,000 shares of Alibaba for $118 per share in the fourth quarter of 2021. As for the other half of the shares, Charlie Munger bought 165,000 shares for $226 per share in Q1 of 2021, and another roughly 135,000 shares for $148 per share in Q3 of 2021. This shows Charlie Munger has already lost money from his Alibaba shares since he sold half of his Alibaba shares, 300,000 of them, at roughly $108 per share last year. This is lower than what he paid for it, which was roughly $226, $148, and $118 per share across the various quarters. Interestingly, if Charlie Munger had kept those 300,000 shares he sold last year, he would have made more gains. Since this year, Alibaba is now $117 per share, while Munger sold them at $108 per share last year. You could say Charlie Munger was wise enough to keep the other half of his Alibaba shares, since he has profited from Alibaba's recent rise in share price, but you would be wrong. Alibaba's current stock price is currently at $117 per share, far below what he paid for Alibaba stock, which was roughly $118 per share, $148 per share, and $226 per share. Basically, what I'm saying is Charlie Munger is still in the red because of his China play. He has not earned a single cent of unrealized profit from Alibaba stock since he bought it. Alibaba stock would have had to rise above what he's paid if he wants to profit from his trades. And so far, it hasn't. And even if it did, we would still need to subtract the losses he took from the Alibaba shares he sold in Q1 of 2022. While Alibaba stock is trading below its fair value, its stock price has been disconnected from its actual business fundamentals. Goldman Sachs has Alibaba on their conviction buy list, which drove investors to pile into the stock this year. If Alibaba's fair value finally reconnects with its stock price, then the share price will rally. Charlie Munger will have to wait till Alibaba returns to its previous highs before he can recoup his losses and then some. And if it doesn't, well, Alibaba makes up 15% of the Daily Journal's portfolio, so Munger has other horses in the race. Now, this isn't a recommendation to buy Alibaba stock. The reason why I made this video was because I was curious about what happened to Charlie Munger's Alibaba stock. If you do buy Alibaba stock, be careful. China may have stopped their zero-COVID policy, and its economy is also rebounding, but the Chinese New Year is around the corner, so COVID cases might skyrocket soon when the Chinese go back to their parents' house for a New Year visit. Anything could happen. This video isn't meant as financial advice or anything. It's for entertainment purposes only. Do your own due diligence before investing in Alibaba stock. Thank you for watching. Like and subscribe.